Now we're going to learn how to swap our hard-earned tax dollars for high-growth passive cash flow assets and then combine them to pay off your home mortgage in less than half the time. So let's take a look at this example. We've got a house worth $500,000, the mortgage is $350,000, and we've been chipping away at it month after month, paying it down the old-fashioned way, principal and interest at 5% interest. That's just over $1,990 a month in principal and interest payments. Now, a traditional old-fashioned way of paying your house off is really a redundant concept, but it's not a concept that works these days. We all know that. When you retire, all you got is this house paid off and no income. You've got no other assets. And of course, most people do not want to sell their house to cash up. They don't want to move. As educated property investors, we want to move forward and create wealth for our future, for our retirement, for our kids, or for whatever reason you want. And part of that increasing financial efficiency is to make sure we pay our home loan off as quickly as possible because it's bad debt. Okay, using this old-fashioned way of paying the principal and interest and paying our house off can take up to 30 years, which is way too long. So here's an example of a very easy to implement strategy. Instead of paying principal and interest, we pay interest only. Your payment to the bank would go from $1,990 down to $1,490 a month. So you would end up with $500 extra in your pocket each month. Now I can hear you saying, hey, hang on, we're meant to be paying our house off. Yes, but this is how it works. So you take that $500 and put it in your offset account. Then you take your wages and put it straight into that offset account too. Then this is where you get a credit card with 55 days interest free to pay for your expenses, for leaving as much money as possible in your offset account at all times, because the interest on your home loan is calculated daily. So the more you have in your offset account, the less your mortgage is costing you. Then at the end of that 55 days, you dip into your offset account and pay off your credit card using the credit card to collect frequent flyer points. Using just this strategy alone, you will pay off your mortgage in 8 years, saving you 21 years. Now, if you look at this graph, the red part is what you would have paid, how long it would have cost, and then you've got the blue graph is how much it is now. And basically, you're saving a lot of time, but not only that. Your home loan is paid off in 8 years, but also, on this example, you're saving $254,924 off your home loan without spending an extra cent. Pretty amazing. So, how do you reduce it down to 5 or 6 years? Remember that equity sitting in the lounge room watching Days of Our Lives doing nothing? Well, actually, we're going to take it out and we're going to use it to create wealth. So we're going to take the equity out, put it into investment property, and then the rent goes in. And then we're going to use more equity, put that in, and we're going to keep going. And it keeps building our portfolio like that. And then in April, their positive cash flow $53 a week, and they save $50,000 worth of payments off their mortgage payments just in their first 12 months, which is pretty amazing. And they're ready for the next one very soon. This is Thomas. He's positive $42 a week. He moved here from Germany, and he's already in the market to buy property, which is awesome news.